Hi everyone, welcome to the launch of the 2022 Performance Data and Insights publication. My name is Michael Rowland and I'm joined by Tim Edmonston from the New South Wales Department of Primary Industries to talk through some highlights and the great results for the primary industry sector in 2022, which are now available online. 2022 delivered exceptional growth for New South Wales primary industries, with the sector reaching an estimated $23.1 billion in gross value of production, otherwise referred to as GVP. This is 23% higher than the previous record set last year. Even more impressively, this is $11.8 billion higher than just 2 years ago. I want to pause there just for a moment and let that sink in. That's 92% growth in just 2 years. To put that in perspective, primary industries had the highest growth of all sectors in the national economy over this period, while national GDP grew by less than 17% in comparison over those same 2 years. Perhaps even more surprisingly is that this result has come amid some challenging circumstances for primary producers, which will be outlined later on. Unlike last year, there were few industries that recorded negative growth. Whilst Tim and I will discuss the strong performances of the cropping and livestock sectors, the horticulture and wine grape sectors face more challenging circumstances. Horticulture faced some production challenges due to flooding or storm damage for some crops, and prices for some key commodities such as almonds were sharply lower. Wine grapes were heavily impacted by lower prices as a result of the increased supply and the loss of the Chinese market as a large increase in tariffs imposed started to bite. I want to quickly touch on a couple of key macroeconomic factors which were important contributors to the GVP result. The first one is very strong global food commodity prices, which was driven primarily by a range of global supply issues. This, combined with the relatively strong post-pandemic economic recovery, pushed up prices for many of New South Wales' key commodities. The second factor of note was significantly improved water allocations across the board, especially in the Northern Basin. This boosted summer crop production, notably for cotton, as well as rice in the Southern Basin. Macroeconomic factors were not completely in producers' favour, however. Issues with labour availability continued to impact the whole economy, and the sector was not spared, particularly for seasonal workers, as shown on the chart on the left. Labour shortages were the most acute for horticulture, but were also a major issue during the winter and summer crop harvesting and for the processing and grain handling sectors. However, international visa holder numbers have now started to rebound more recently. International bulk and container shipping costs also soared during the year as a result of the supply chain disruptions, regional COVID lockdowns, and the post-pandemic economic recovery. This substantially increased costs for exporters and also increased the price of key imports such as chemicals for farmers. Freight prices peaked in the first half of the year and have now fortunately settled back closer to longer-term averages. The 2022 financial year marked another exceptional year for New South Wales primary industries exports, smashing through the previous record achieved only last year to reach a new record high of $10.9 billion. This is an outstanding result for New South Wales, which typically consumes a higher proportion of domestic production compared to other states. Broadacre crops and livestock exports both reached record highs. The cropping sector benefited from higher volumes and export prices, while the livestock sector primarily benefited from higher export prices. To better understand the drivers of those record export levels, the PDI breaks down our markets and commodities in detail. A large increase in wheat, cotton and canola exports was a key driver of New South Wales market share by export destination, with some other key highlights including exports to China, which rose by 49% to $2.9 billion due to strong exports of wool, wheat, sheep meat and sorghum. This was despite the continuation of trade tensions, which impacted exports of cotton, barley and wine. Another highlight was exports to Vietnam, which almost tripled and exceed $1 billion for the first time. The cropping sector was the primary driver of growth in 2022, reaching $11.9 billion and an annual increase of 43%. Winter cropping remained at near record levels, with a combined 19 million tonnes of grain estimated to have been produced. This places it as the third largest crop ever produced nationally, after the New South Wales crop last year and Western Australia's whopping 23 million tonne crop in 2022. Industry highlights include wheat, which added another $500 million to previous record levels and is the first commodity to break through $4 billion in GDP annually. This is despite harvest storms in November last year, which downgraded the majority of the crop to below milling grades. While cotton recorded 245% growth to exceed $3 billion, while canola benefited from the extreme drought conditions in Canada, which put a rocket under prices. Barley was the only major cropping industry to decline in value, as some farmers opted out of barley in crop rotations due to subdued prices relative to other commodities. A key element of primary industry success in 2022 has undoubtedly been attributable to rising prices for the cropping sector. As you can see in the chart on the left, all major crops received strong price support driven by international factors, which included prolonged and severe drought conditions in many Northern Hemisphere cropping regions, which reduced supply and tightened global stocks for some commodities, as well as the war in Ukraine, which displaced huge volumes of grain in export markets. While local prices did follow international prices higher, some commodities lagged behind international benchmarks, as illustrated on the second chart for wheat and the third chart, which is for canola. These charts show that the local price difference relative to the international benchmarks, and as you can see, sometimes we have a premium where it is above the line and typically associated with drought periods in New South Wales, while now we are trading at a discount to international levels. The easiest explanation for this is that the international wheat and canola benchmarks are set in the US and Canada respectively. So when local supply is short in these regions, it is typical for local prices to increase relative to other areas where supply is ample, like Australia at present. Local ports have also been operating at 200% higher than average port capacity since November 2020. This bottleneck is also likely to be reducing demand, which is impacting local prices. Now to finish this section on the key growth industry of 2022, which is cotton. New South Wales cotton production benefited from high soil moisture levels at planting and favourable in-crop rainfall during the growing season, as well as maximum water allocations in both the northern and southern basins. Combined general security regulated water allocations for major valleys reached more than 6,000 gigalitres, the highest levels since the national water reforms began in 2007. As a result, cotton production reached peak levels of 3.7 million bales in New South Wales. Cotton has also benefited from a rapid expansion into non-traditional growing areas in southern New South Wales, with new varieties and management practices making it an alternative option for growers in this region. Despite a rebound in the volume and value of cotton exports, the industry continues to be impacted by the unofficial Chinese trade boycotts. The good news is that the cotton industry has been able to diversify its markets, with Vietnam almost replacing China as the largest export destination, along with export growth to Indonesia and Turkey also. However, these new markets have come at some expense, with Australian cotton prices trading below international levels for the majority of the year. Some of this impact is masked by the extraordinary global cotton prices received over the year, which meant local prices were still much stronger despite the discount. Overall, it was a great year for the cropping sector, with some challenges along the way, but I'll hand over to Tim to talk you through the livestock and outlook sections now.
Thank you, Michael. It is my task to give an overview of the livestock sector, as well as some brief comments on the outlook. No easy task, given the outstanding year for cropping, which Michael has just covered. That said, the continuation of excellent seasonal conditions has also underpinned a succession of records for the livestock sector. New South Wales livestock GVP increased 13% to $7.9 billion, which is a new record high. This is a remarkable result when you consider that red meat producers, who contribute the largest share of GVP, continue to focus on rebuilding the state's herd and flock. As a result, cattle slaughter fell to a record low. However, for sheep meat, where breeding cycles are quicker, production has already recovered to pre-drought levels. Beef production is comfortably the largest livestock sector in New South Wales, with a GVP of $3.2 billion, up 16%, which is a record high despite the decline in slaughter levels. I will explore this a bit further later in the presentation. However, the record was primarily achieved as a result of 2 successive years of very strong price growth. Wool grew GVP by 24% and achieved a GVP of over $1 billion for the first time since 2019, benefiting from the post-pandemic global recovery, which created increased demand for woolen products. For livestock sectors, 2022 was very similar to 2021 in that it was very much a price story. Unlike 2021, however, this year all livestock sectors achieved price gains. The chart on the left of this slide shows key livestock commodities ranked by GVP. The red bar shows the price change in 2022, and the green bar shows the average 2022 price relative to a 9-year history, which is the period we have been collecting data for the performance data and insights. As you can see, all commodities achieved solid price gains in 2022, and apart from wool, are well above historical averages. It's also worth noting that relative to history, virtually all livestock categories achieved prices at or close to record highs in 2022, as shown in the chart on the right. Only wool, which is very susceptible to global economic conditions, has a current price well below its historical high. So the question is, are current prices as good as it gets in the short term? For domestic focused sectors such as eggs, pork and poultry meat, there may be some price rises as a result of the substantial increases in the cost of production these mostly intensive industries have experienced recently. Dairy farm gate prices are also increasing due to a significant fall in supply in recent years, as dairy farmers deal with production challenges and farmer exits from dairying remain high. However, for red meats, which are our largest livestock sectors, we expect some pressure on prices as supply for both beef and sheep meat increases. Looking more closely at the state's largest livestock sector, beef, which like 2021 was again the standout sector in 2022. All categories of cattle reached new record high prices during the year. On average, prices were up 17% and are now up over 55% since the lows of the recent drought. The average price, however, conceals a considerable divergence between categories of cattle. With producers desperate to take advantage of excellent seasonal conditions, they continue to compete aggressively for lighter cattle and breeding stock, whilst finished stock prices were not as strong, as illustrated in the chart on the left. A good example is comparing restocker steers with heavy steers and feeder steers. Restocker steers, having risen in price by 53% last year, rose by another 34% this year. Feeder steer prices, while strong, were lower, and heavy steer price rises were lower still. During the year, the discount which heavy steers received relative to light steers rose to the largest on record by a considerable margin, as shown in the chart on the right, which meant that cattle traders and lot feeders were taking some risk to their margins despite the overall positive trends. As mentioned earlier, the strong rise in prices supported record high beef GVP, despite slaughter levels reaching the lowest level recorded since the ABS started collecting data in 1972. Overall production was not as low, thanks to a significant increase in carcass weights over that time. However, overall production was lower than at any time since 1989. This makes the 2022 record GVP even more remarkable, thanks to the excellent prices producers are now receiving, and it is testament to the huge strides the industry has made in developing export markets and improving quality. Although finished stock prices lagged lighter store cattle, prices were still up strongly and did accelerate in 2022, which, combined with this lower supply, created a difficult operating environment for processors. Fortunately, average export prices were also up approximately 24% during the year, which provided some relief for processors. Looking now at the GVP, at the outlook for GVP, the GVP achieved in New South Wales in 2022 will be a hard act to follow. Apart from anything else, the uncertainty created by rising interest rates and a volatile geopolitical environment make estimating the outlook for 2023 very difficult. Last year, we were able to point to many drivers which were likely to support further growth for primary industries. Whilst most of these drivers remain in place for 2023, including supportive seasonal conditions and historically high commodity prices, there are some headwinds emerging. The current La Nina weather pattern is delivering generally excellent growing conditions. However, it is also delivering widespread flooding and significantly hampering the winter crop harvest and the sowing of summer crops. It is also likely to create challenges for our horticultural sector. Livestock production will increase as a result of recent increases in the state's herd and flock. However, as I've just outlined, the increase in supply will likely lead to some price falls. Persistently high input costs, especially for fuel and fertiliser, as shown in the chart on the right, may also require producers to assess the risks of chasing maximum production. The cost of key fertilisers are now multiples of the price paid in only 2020. Labour shortages are impacting production, especially for horticulture, and are also creating bottlenecks for the processing, grain handling and export sectors, which may start to impact prices received by farmers. As shown in the chart on the left, our largest commodities produced record or close to record high GVP in 2022, except for wool, thanks to the unusual combination of record high production and record high prices. The commodities in this chart represent over 75% of GVP. Given some of the challenges emerging, at least some of these commodities may struggle to match the 2022 result. Despite these challenges, however, we expect GVP to exceed 20 billion in 2023. Whilst lower than 2022, for perspective, this would still be comfortably the second highest value on record. A significant caveat, however, is that this forecast is dependent on a reasonable winter crop harvest. Current flooding and weather conditions may challenge this. Michael and I have given you only a very brief overview of the information included in the performance data and insights. Whilst the outstanding 2022 GVP result reflects the impact of good seasonal conditions and favourable export prices, it also reflects the ability of producers to capitalise on these conditions, the efficiencies of the New South Wales supply chains, and the resilience of the industry in dealing with challenges as they arise. We encourage you to follow the link and explore the information available. There is much more detailed analysis of each of the commodities produced in New South Wales, as well as more detailed analysis of exports, forestry, fisheries, and recreational fishing and hunting. Of potential interest, there is also some analysis of primary industries production by local land services region based on 2021 data. Thank you. If you have any questions about the PDI, please feel free to contact the Insights and Industry Analysis team.